We have Manas Jaiswal as well as Raghavendra Kedia joining us to talk markets and help our viewers with their host of queries on their investments. Manas, hi, morning. I'll come first to you. What are your high and low risk ideas for the day?
Looking at the breakout, what we have seen on Nifty, I think one should definitely go long in most of the stocks, and many stocks have given breakout today. So I have three buy recommendations. So first one is a buy call on Tata Power, where the trend is quite positive. Stock has been making higher tops and higher bottoms from the level of around 80 rupees. And now stock has given a breakout above 112. So I think one can take a long position in Tata Power. Stop loss should be around 110. Its target would be around 121. Secondly, the buy call on Cummins. Here also the trend is quite positive, and stock has given a flag breakout on the daily charts. So in Cummins also you can create long position with the stop loss of 889. Here the target would be around 950. And last one is the buy call on JSW Steel, because most of the metal counters are looking strong on the charts. And JSW Steel is moving sideways, but looking at the pattern, I feel that in a day or two, it can give a breakout. So one can take a chance right now, buy JSW Steel with a stop loss of 414. Here the target would be around 445.
Interesting picks. There are three buy calls presented by Manas for the viewers today. Let's also go across to Raghavendra. Raghavendra, how are you looking at the markets as of now? A bit of chop and churn, and what do you think about the value proposition that I think a lot of people are speaking about, and what are your high risk and low risk ideas for us?
Good morning. Overall, on the broader market, we are very cautious and trying to book profits wherever possible. The markets have gone up too fast, and few concerns which we like to flag off are crude oil increasing would be a dent on the fiscal deficit side for the overall economy. The government has a lot of state elections lined up in the next few quarters or next year or so. So there will be a few populist measures which could also be not very great for on the reform side of the economy. So that's another concern. Also, on the base metal side, the commodity prices heating up is also not great for overall economy and the manufacturers across India. So these are few concerns. And on the reform side of the government, we believe that the tax cuts which were declared in 2019 and the stimulus liquidity measures by the finance minister, these are largely being done with and already factored in the prices. So with no major big positive trigger lined up, we believe that this could be an opportunity when the markets are trading at life high levels to book some profits, raise cash, and look for better entry levels at lower levels. So be cautious at current levels on the broader market.
All right. Okay, thanks for that, Raghavendra. Request both of you gentlemen to stay on with us. We are slipping into a break here, but before we do that, here's CLSA's Lawrence Balanco, who shares his views on the upside recovery and says that India will lead the emerging markets back down the road. Listen in.
Going through the recovery of the March lows, you basically had technology and pharma leading that. Those two sectors, and pharma in particular, sort of peaked out last year, October 2020, and you've seen some relative underperformance. That has been generated by a simple trading range. But the key sector driving us towards the 16,500 and longer-term target of 18,000, we see the banks being the key driver there. And one of the lagging banks has been the PSU banks, which we now see participating. So in addition to the broader banks index, you've got the PSU banks coming through and supporting that new leadership.
Lawrence Balanco there. Raghavendra, I just want to remind you, you haven't given us your high risk and low risk ideas. Could you take us through that very quickly?
Yes. So our top idea is a wealth creation idea, which is CDS and Central Depository Services. The stock is currently trading at 590. This is a pure play stock if you are bullish on the capital markets of India. If brokers make new clients, if mutual funds have new subscribers, or if exchanges launch new products, CDSL benefits all across. CDSL operates in a duopoly environment with the only other competitor being an unlisted entity. So that makes CDSL as a stock one of its kind. On the growth side of CDSL, we are very bullish. They have made demat accounts at a rate where from the first to 1 crore to 2 crores, it took them 5 years. But the same growth from 2 crore demat accounts to 3 crores took them only 1 year. So they are growing exponentially. They have launched a lot of new products in terms of e-signature, e-KYC, even if for commodity repository, equity repository, insurance depository, the company has launched new products, tie up with mutual funds. So it's a great stock. We believe that the stock could have a P multiple of 50, earnings of 50 and a multiple of 30, which gives a target of 1500 for the next 2 years. So it's a wealth creation idea which can give you 150% return if you hold this CDSL stock for the next 24 months. Moving on to the next idea is Alembic Pharma, currently trading at around 930 rupees. What we like about Alembic Pharma is the promoters are buying this stock since last 2 quarters. The promoter group in Alembic Pharma already holds around 69%, and the further appetite to add more stock is very comforting. Already, the institutional holding in Alembic Pharma across mutual funds, FIIs, and insurance companies is 17%. So that reflects the good corporate governance of the company. The capex done by the company in the last 5 years have started to give results. The company has a very good US FDA approvals of around 200 under approvals. And we believe the research and development and the pipeline for applications on the US FDA approval side would give them around total 350 US FDA approvals in the next 4 to 5 years. So that could be a big positive. It's a slow and steady mover. Buy this stock for a target of 1500 for the next 12 months. So around 50% upside if you hold this Alembic Pharma stock for next 12 months. Thanks.
Right. Right. All right. Thanks, Mr. Raghavendra, for that update. We are slipping into a short break, but we'll address queries on the other side, so do stay tuned.
Welcome back. You're still watching Buy Now, Sell Now right here on ET Now. Time to touch base with our viewers and address their viewer queries. Most of our queries today are in email format. Let's address the first one. Sandeepan Das has tweeted to us. He says he took a call position of March expiry of IndusInd Bank at 1120 shares at 44.3. He's already incurred a huge loss, so he wants our technical expert to advise him on the next step, whether he should stay put, exit on this particular investment made in IndusInd Bank. What is your sense on this, Manas?
Understand that this is a consolidation phase. The undertone is definitely bullish, but you have to keep big stop loss now because a stock has a lot of support near to 1,000 rupees. So keep your stop loss below 1,000 rupees, hold it. On the higher side, if it breaks 1055, then again you can see the levels of around 1110, 1120.
All right, let's go across to the second query then. We've got a question from R. Subramanian, and this is on Valiant Organics. I'm going to come to you on this one, Mr. Raghavendra, because from what I see, it's a small cap company with not too much volumes. It's seen a bit of losses in the year-to-date period, down about 17.5% or so, and I think it got that rise or that ride that a lot of the specialty chemical names saw in 2020. What do you have to say about the fundamentals of this counter? We've got an investor who's losing about 20% at this point. Should they average or should they look to book losses and exit?
We would recommend the investor to hold on to the long positions. We see that Valiant Organics currently has an full year EPS of around 110. So at the current price of 1260, still the multiple is around 12, which is very cheap as compared to its other chemical stock peers. So there could be a catch-up play. So hold on to this stock. There could be some positive triggers with strength in dollar, China polluting norms getting more stringent. So the export book of Valiant could grow up. So hold on to this stock for a good upside in the next 1 year.
Okay, let's move on to our next query then. R. Subramanian has tweeted to us. He wants to know our expert's opinion on Valiant Organics. He's currently incurred a loss of about 20%. He wants our experts to advise on whether he should stay put or exit. Manas, technicals first for Valiant Organics.
See, we don't have much data on the charts, but again, if you're talking about the trend, I think the trend is negative. We have already seen a lot of underperformance, and I believe that we may see more downside. So I think on rallies near to 1300 or maybe 1340, it is better idea to exit from the long positions, and one should create long position now only on a breakout above 1410.
Okay, all right then. Moving on to query number 3. N. Chandrasekhar has emailed to us. He has bought 5,000 shares of Thomas Cook, and the buying price for this transaction has been 65 rupees a piece. He wants to understand what the outlook is from the fundamental as well as technical standpoint. Right now, is perched at 56.6 rupees. He has clearly, not made any money on this so far. Manas, what's your verdict on this one?
See, I'm quite bullish on Thomas Group because looking at the medium-term charts, I believe that stock has potential to come in the range of 85 to 86 rupees, but it may take time. So I think it is a better idea to hold it, keep your stop loss below 50 rupees.
All right, Raghavendra, I'll come to you on this one. We're talking about Thomas Cook. Of course, it went through that whole phase where because of an entity abroad, it faced quite a bit of losses. But on the fundamentals, what's your view on this counter? And should Chandrasekhar hold on? He's making losses at this point. He's bought at 65 levels.
Thomas Cook, the viewer can hold on to this stock. We believe that worst is over in terms of the global pain point and the travel restrictions opening up soon. There could be some spring action for leisure travel as well. The stock had made highs of 250 2 years back, and it will be a patience play. But if the investor holds on to this stock, as borders open up, business travel resumes, spending picks up, this could be a good 30% return from here or more. So hold on to Thomas Cook at current levels.
Next counter that we have that we're speaking about is we've got William Leo Pinto, who's gotten at levels of 99. That's more or less where the stock is at right now, but I'd like to remind you it's doing quite well in trade today, up about 3.7% or thereabouts, 3.6%. But for the year, if you look back over the last 12 months or so, it's done phenomenally well. I'm going to come to you first, Manas, on the charts. He's more or less at cost right now. Does he hold on?
He can hold it because on the weekly chart, you can see a clear flag pattern breakout, and the target of this breakout comes near to 130, 140. So keep your stop loss below 84 rupees and you can hold it. I think you can see the levels of around 130, 140 in next 3 to 6 months time.
All right. Infibeam, Raghavendra, what is your assessment of the fundamentals of the company? Should one stay put?
The caller has not made any profit or loss at current levels. My recommendation would be to hold on to Infibeam. One trigger on the upside we see is a lot of IPOs of peer companies or competing companies are lined up in the next 2 or 3 quarters. That would give some uptick valuation and a catch-up for Infibeam. The stock has consolidated and look poised to go up from here. So the whole buzz about the fintech and the overall strength in the IT would actually take this stock to further up levels. So the investor can hold on to Infibeam at current levels.
Okay, we have time for one quick query, which is also an email. Abhilash wrote to us. He bought 300 shares of Railtel Corp at 114, wants to know whether he should sell or hold. Raghavendra, I'll come to you for Railtel Corp first. What's your sense of how the company is poised to grow in times to come?
Well, on the fundamental side, the company has a very fresh IPO and a very fresh listing. So we will wait and watch in terms of how the next 2 quarters on the earnings side unfold. But that said, with Mr. Piyush Goyal as the railway minister and doing a lot of reforms for across rail-related companies, this could be a stock which could be a slow and steady up mover. So the investor in RailTel could hold on to current levels for a good 20% per year return if things go well on the reform side of government. Would advise to continue the long position.
All right, new listing there, RailTel Corp is a hold from Raghavendra's side. It's been a pleasure speaking to both of you, Manas as well as Raghavendra. Thanks so much for joining us on this program. And on that note, we're slipping into a short break, but do stay tuned. We're bringing you a lot more news and updates on the other side.